Okay, let's move on and let me now welcome on board Manoj Viswanathan, the MD and CEO at Home First Finance, joining in on the show right now. Manoj, hi, you'd guided for an AUM growth in excess of 30% for FY24. You've clearly met that guidance. Do you believe this kind of traction is going to sustain for FY25 too?
We are finding the traction quite good in the market. So the demand is excellent, and we are also able to roll out our distribution the way we thought we will be able to do it. So we are expecting another year of 30% plus growth.
Morning. So given that numbers are largely in line with what the street was expecting, what is the outlook on growth that you're penciling in, especially when it comes to your NII, your total disbursements in FY25?
Disbursement, will basically flow from the AUM growth itself. So if we need a 30% AUM growth, we need to disburse in excess of maybe 4,500, 4,600 crores.
Right. And your average debt to equity ratio has gone up sharply from 3.4 to now 2.7. Help us understand what's really led to this jump, and are you comfortable with these debt levels?
Debt to equity ratio is basically, yes, it has gone up and that is in line with how the business has also moved up. So we don't. So there will not be any sharp jump. So if you see the asset to equity, it has moved up from 4.3 to 4.5. So you can expect the same. Like a 20 basis points movement every quarter, because that's in line with our growth. So it's basically the incremental borrowing that we are doing to, reach the growth target that we have, which is 30% AUM growth. So there'll be no sharp jump. It'll be the same movement that you can see. And so we are not looking to raise an equity soon. Maybe at least another 2 to 3 years, we are not looking at any equity because we have sufficient equity. We can continue to grow at this pace for at least next 2 to 3 years.
And you've also announced a fundraise not exceeding 700 crores via the debt instrument. What impact will this have on the overall debt of the company? How will the funds be deployed?
See, all the debt funds that we raise are all deployed towards new housing loans. And this NCD approval that we have taken is basically an enabling approval, because if we want to raise the NCDs in the next 6 months, we need to have this approval in place. So we don't have anything which is lined up as of now, but it's more of an enabling approval.
Right. So let's talk about your NIMs, because there's been some pressure in the fourth quarter. What's causing this pressure, and can we expect any improvement from here on?
So NIM compression is partly due to the increase in the cost of borrowing. So that is causing some NIM compression. Partly it's also because we were carrying excess cash at the end of the quarter, and that's also a contributor. If you net off these two things, it will be more or less in line with our last quarter NIMs. But having said that, there will be some pressure on NIMs, at least for the next couple of quarters, because there is still some residual transmission of the rate increases that are still left. So till the time the rates start reversing, there could be some pressure. Not major, but there could be some pressure on NIMs going forward.
And the affordable housing finance space is heating up, with the largest player in this space now coming out with their IPO. What is the impact that you think the competition will have on the company? What's the growth strategy or plan to retain market share?
As more companies get listed, the competition is going to get more and more, I would say, rational and normalized. Because private players, depending upon their priority, if they're not listed, depending on their priority, they can actually reduce rates and also cause some turbulence in the market. But if you're a listed player, generally the rates would be fairly stable, and the competition would be more rational, is the way we look at it. So we welcome more listed players in this space, and it also gives the space a lot more credibility when there are a lot more listed players. So we are, the market is actually very large to accommodate multiple players. So we feel quite happy to have more players in the affordable housing space.
Right. And your asset quality, both gross and net, have been stable for the past few quarters. But when is it that we see an improvement?
These are the figures that we are, metrics that are suitable for this business. As you can see, we have a lot of focus on early delinquency. So our 30 DPD numbers have actually come off compared to last quarter. So from 3%, it has reduced to 2.8%. So broadly in this range, 2.5% to 3% for 30-day past due, and gross NPA being between 1.5% to 2% is something that we are comfortable with for this business. So you will see it hovering around in this range only.
All right, good to interact with you. Thanks so much for giving us those key takeaways. Another year of 30% AUM growth and looking at disbursing close to 4.5 to 4,600 crores to meet that target.
If you like this video, then like, share and subscribe to ET Now.